Hey guys, the recent Business Times report says that if you had invested only in the STI in the last 10 years, how much money would you have made? Yes, you guessed correctly. You would have lost money. You would not have made any money. Now, even with dividends reinvested, it comes out to a pittance as compared to other indices like the S&P. Now, is this therefore a reason why young Singaporeans, when it comes to investing, are expressing anxiety? Because of one, limited resources, two, you're actually in an environment where a lot of millionaires, so you're actually not one of them. You'll notice that it's become pressurizing, as well as the fact that essentially that you need a good sense of knowledge and you need to learn from the right kind of people, right kind of sources. In today's video, let's examine this in greater detail so that you will know how to protect and enhance your wealth. That as the Dow Jones, the Nasdaq, and the Standard & Poor's have all hit record highs. In fact, the S&P index as of last night has registered 53 consecutive higher highs for this year. And what did our STI do? Man, it's just gone flat. So the comparison is huge. Invest in the STI, which gone flat, you don't make money. Whereas actually for the Dow Jones, particularly on the S&P index, you're getting higher highs. In fact, the S&P has already doubled from the low that was reached at 2002 in the pandemic in March of last year. So can you imagine that if you have put in $1 million, that would have been $2 million now. Can you get this for the STI? Man, no, man. You can only smell it. Okay, so as we have said, ladies and gentlemen, the S&P continues to rage on. Okay, in fact, there's a few studies done that this month alone, S&P is poised to register a gain of 18%. In the last 5 times in which the S&P hit a 18% return in the first 8 months of the year, the next 4 months of the year, it has gone on to finish the year with even higher gains. So are you positioned to benefit from this? Whereas for the STI, you can see it just gone sideways. Now in our class on the 25th of December, this is exactly what we are going to go through. We are talking about investing profitability in the FANGs because we are bringing our more than 3 decades of experience to share with you and to actually identify for you, which are the ever evolving tech stocks that you should have in your portfolio to enjoy this tremendous returns that the S&P, the Nasdaq, and the Wall Street is able to present to you. But more importantly, it is actually being able to invest on a consistent, safe, steady method, unlike investing in the STI. So essentially now, as I've mentioned earlier, this was what the Straits Times say, or rather the Business Times say 3 weeks ago or 2 weeks ago. It says that STI has delivered weak returns, not just 1 year, not just 2 years, not just 5 years, but over 10 years, ladies and gentlemen. So over a 10-year return, you can see the STI, if you've just invested in Singapore stocks, right? Without dividends invested, you notice that the capital return is negative. Yes, ladies and gentlemen, in the last 2 weeks, the share price has gone up to 3,420 as of last night, compared to the 3,002 level that we were telling our students in our last class just 2 months ago. So this coming class, we're going to affirm for you, and we're going to tell you and guide you which are the other technology stocks that would be able to deliver this kind of fabulous returns. So let's come to this part, right? Why are young Singaporeans expressing anxiety in investing, right? One is because you have limited budget. Yes, when it comes to investing in GCP Global, we stress capital protection, very important. So we look at your risk protection in terms of the stocks selection, because that's key in protecting your downside and key in helping you to measure your margin of safety, which is something that we hold close to our heart. Now, the fear of incurring losses, well, ladies and gentlemen, when it comes to investing in the stock market, is not surprising. that if you are a value investor, intuitively, you should be prepared for a certain periods of time where your stock underperform. That's why you're able to buy them on the cheap in the very first place. Okay, there's no such thing as a free lunch where you want to get good stocks, perform straight away. Okay, then that's not value investing. Okay, and there's a lack of investment knowledge among the Singapore young that cause anxiety. Well, do come to us because we are bringing with you more than 3 decades of experience to share. Okay, so if you like this video, give us a thumbs up and join us for our class on the 25th of September 2021 and sign on quickly now at GCP Global website to enjoy your early bird special until the end of the month.